channel. We are streaming live into the YouTube channel. And let's continue from like there we began. Let's continue. This is what we are talking. This is what we looked at recently. So we are going to continue from where we stopped. I'm not feeling well, but let's move on slowly by slowly. So we looked at candlestick chart patterns. Let's remind ourselves of the candlesticks that we looked at. Let's remind ourselves on the patterns that we looked at. Let's remind of ourselves. Just tap. We looked at candlestick chart patterns. Let's give some of the examples in the comments. Tap on the chart and let's look at the patterns. Give us some of the patterns that we looked at recently in the previous lesson. In the previous lesson, we learned about candlestick chart patterns. Which were those? Let's name them. Just name them from the chart. Let's name the candlestick chart patterns that we looked at because we're going to build from there. Bullish and bearish. Yes, they are bullish and bearish, but they had names. They had names. They had names. Which names were those? Candlesticks target up zero bullish and bearish, but which were those? Bearish engulfing. Thank you very much. That was number one. Another one, number two. We talked about a lot of them, and one of them was the bearish engulfing. Thank you very much, Abdallah. We looked at the doji. Thank you very much. Those are the people that attend the classes. Now, if you didn't attend the class, it means you don't know. Yes, we looked at the bearish engulfing bar. What else did we look at? The dragonfly doji. Thank you very much. Dragonfly doji. Let me see people that are attending classes. We looked at the dragonfly doji. And we say the opposite of the bearish engulfing bar. Yes, we looked at the hammer. Thank you very much. Looked at the hammer. Looked at the dragonfly doji. Looked at the bearish engulfing. Looked at the shooting star. Thank you very much, Abdallah. I've loved you so much. Thank you very much. It means you attended the lesson and you also took some notes and you understood everything. Now people are here looking at us and they want to understand it today without knowing what was taught recently. If you don't, that's why I don't want you to miss lessons. Okay? Yes, you had the morning star, had the evening star, had the shooting star. You say the purpose of the shooting star is the hammer. Had the dragonfly doji. Yes, if it is not a dragonfly doji, the opposite of the dragonfly doji. What is the opposite of the dragonfly doji? Thank you very much, Abdallah. Thank you for attending classes and taking them serious. Yes, evening star, dragonfly doji, shooting star, morning star, the hammer, the doji, the bearish engulfing bar, and the bullish engulfing bar. Those are the patterns that we talked about. So if you were not here, those are the things that we studied. Please go back to the YouTube channel and make a review of that class. Go back to the YouTube channel and make a review of the class. All right. Now, let's go ahead. And we'll continue from there. So if you are not attending classes, I'm not going to repeat that. Go to the YouTube channel, review, and make your own notes. Now, today we are continuing. Today we are continuing with what we call the halami. Today we are going to continue with the halami. Okay, I'm going to continue with what? With the halami. The halami can be bullish and it can also be bearish. And a halami is also called the inside bar. So if it is bearish, it is the bearish inside bar. It is the bearish inside bar. Bearish inside bar. And if it is a bullish, it is a bullish inside bar chart pattern. It is a bullish inside bar. A bullish inside bar chart pattern. Okay. And the bullish inside bar chart pattern, it is a chart pattern that can work in two ways. When you find it at the demand zone or the supply zone, so when we look at bullish, the bullish is always formed at the demand zone. Okay, it's always formed at the demand zone, and the bullish inside bar is always looks like this. It's made up of a big candle, which is the green candle, which is a red candle. It is a red candle like this. It is a red candle like this. So this one is a red candle. It is a red candle like this. Also a green candle like this one here. Also a green candle like that one there. Okay. And this one, once formed at the demand zone, whenever you find it at the demand zone, it can act as a reversal signal. Can act as the reversal signal. And when you find it in the middle of the trend, it is always a continuation. Okay, it is always a continuation. Okay, whenever you find it at the demand zone, it acts as a reversal signal to the upward side. It reverses the market to the upward side, and when you find it in the middle of the trend, it is a continuation, as simple as that. The same applies to the bearish inside bar or the bearish harami. For the bearish harami, you will see that we have a big red candle, a very big green candle like this, very green candle like this. Okay, then after, you see that we have a small candle like this. Okay, and this one, when formed at the supply zone, it acts as a reversal to the downward side. It is a reversal signal to the upward side. Reversal signal, the upward side. We're going to go to the chart and I show you this. And once formed in the middle of the trend, it is a continuation to the downward side. Continuation to the downward side, to the downside. Okay. All right. Now, that is the bullish inside bar and the bearish inside bar. Whenever you find the bearish inside bar formed within the supply zone or formed within the selling area, just know it is a reversal signal to the downward side. And once formed in the middle of the trend, it signifies continuation to the same direction. Simple as that. Let's go to the let's look at this. Let's look at this. Let's try to look like this and see whether I can find one or two. Now, sorry. Now, I want you to look at this. See how it is. sorry. Sorry. It's not so much clear. It isn't so much clear. Not so much clear. Not so much clear. I wanted to see the bullish inside bar. Now, let's take an example of this pattern. Okay, you can see this one here. I see this pattern here where I have a big bearish candle and a small bearish candle formed at around the demand zone. You can see that the market was trending downwards. Then after finding this pattern, the market shoots up. Okay, and this one becomes the demand zone. And we have said once it is formed at the demand zone, it works as a reversal signal. Reversal to the upward side. Reversal to the upward side. Okay, it is a reversal signal, the upward side. As simple as that. Okay, and also go ahead and look, find out the bearish inside bar. Can go ahead and find the bearish inside bar. We have said bearish inside bar. You will find out that there is a big candle. There is a big green candle and a small red candle formed near the supply zone. It's formed near the what? Supply zone. And once formed near the supply zone, it works as a reversal to the downward side. It's a reversal to the downside. Reversal to the downside if at all it is formed in here supply zone. And whenever I find it in the middle, I've not seen an example here where it can be found in the middle, and in the middle it just means a continuation to the downward side. Okay, continuation pattern to the downward side. As simple as that. Give me one in the chat if we can continue. Give me one in the chat and we continue. Give me one in the chat if the point is taken home, and we look at another pattern. Give me one in the chat if the point is home and we look at another pattern. Just give me one in the chat. Give me one in the chat. Give me one in the chat. Just give me a one in the chat and we continue. All right. I'll not wait for very many people to give me a one in the chat because I know most people tend to be busy. All right. Now, when you come here, we are going to look at something else, and that one has been the harami patterns. Harami patterns can be bullish and can be bearish, as we have seen. Then number two, don't know whether you looked at the tweezer bottoms and the tweezer top. We looked at the tweezer bottom and the tweezer what? And the tweezer top, and they are also very important when it comes to trading. Very important candlestick. Still, we continue with our table, and we say here you write a tweezer bottom. Then you come here, write tweezer top. Tweezer top. Simple. Remember, one side is bullish and another one is bearish. When it comes to the tweezer bottom, the tweezer bottom is always made at this demand zone. At the demand zone, that's where the tweezer top is made. The tweezer bottom is made, and it is always a reversal signal to the upward side. It is always a reversal signal to the upward side. Whenever you say tweezer bottom, just know that the market is going wild. And here it looks like this. Sorry. So let's draw the tape again. Like this. So this is a tweezer bottom, which is bullish. Okay, this one is the tweezer top, which is bearish. And with the tweezer bottom, you find out that you draw this. You draw this. Then after drawing that, come here and take this also. So that is a tweezer bottom. It is found most of the time at the demand zone, and whenever you see it, it means a bullish reversal signal. Okay, it is reversal signal to the upward side. Okay, I can go ahead and look at the tweezer top. The tweezer top. What makes a tweezer? The candles are always the same. The candles are always at the same size and at the same level. Okay, candles are always at the same size and at the same level. Same size, same level. Same size, same level. Okay, so this one, it always pushes the market downwards, and this one always shifts the market upward. This one, you always find it at the supply zone. And this one, you find it at the demand zone. Okay, so the candlesticks we are looking at, they will make more sense. They will make more sense if they are found in key areas. Okay, and when you talk about key areas, we mean the supply and the demand zones. So they will make more sense when they are found at the demand zone or the supply zone. That's where most of the activity will be seen. That's where their importance will be recognized. You understand? So that is the tweezer bottoms and the tweezer tops. So when you try to go to the chart, we shall find them all. Just make sure that the candlesticks, these candles, they are of the same size, a bit the same size, and they're at the same level. Okay, same size, same level. So they indicate bullish momentum or bullish reversal signals, and they also represent bearish reversal signals when it comes to the tweezer top. As simple as that. Okay. Let's look at next. Let's look at the morning star. Okay, the morning star is a reversal signal that indicates bullish reversal to the upward side. Now, with the morning star, it is bullish. It is a morning star. The morning star is here where there is bullish. So this is sorry. This is a morning star. Let me like this. Ahead, we go ahead like this. And this is the bullish. This is the bearish. Bearish. Now, bullish and the bearish. First of all, we shall have a big candle like this on the morning star. Morning star. So this is the morning star. Then lastly, which will be formed like this. So the morning star chart pattern is a triple chart pattern. It is the triple chart pattern. And it is made of these 3 candles, as we are going to see like this. So this is the pattern. Whenever I find this pattern, it is a bullish reversal signal to the upward side. It indicates that the market is going up. Okay, it indicates that the market is going up. It indicates an uptrend. sorry. It indicates an uptrend. Okay, so whenever you see this, it means market reversal. Market reversal to upward side. That is the market reversal signal, the upward side. It is always formed at the demand zone. Always formed at the demand zone. So most of the time, if you are doing analysis and you find that a morning star appears just within the middle of the trend, you can neglect it. Okay, you can neglect it. So the pattern is very important. If it is found in the demand zone, all supply zone, all in the areas, or all in the key areas. Okay, in the key what? In the key areas. So we can go ahead and look at that was the morning star. So we also have the evening star. So the opposite of the morning star is the evening star. Okay, the opposite of the morning star is the evening star. The opposite of the morning star is the evening star. Then look at the evening star. It is a bit simple. It starts with a bullish candle where the market has been trending upwards. When the market has been trending upwards, then it can come here and formulate a red candle that is smaller in size, but to the upward side like this. Then after, it forms a big red candle that indicates stronger volume to the downward side. Okay. And the morning star, it's a market reversal. It is a market reversal signal. It is a market reversal signal to the downside, to the downside, to the downside. Market reversal signal to the downward side. It is a market reversal signal to the downward side. It indicates a downward trend, inevitable. It tells that a downward trend is taking over, or the market is changing from being bullish to being bearish. It is always formed at the supply zone. It is always formed at the supply zone, indicating that the market is going to the downward side. Okay, it indicates that the market is going downwards from demand to supply. As simple as that. So hope this one is also in your book. And when you are making analysis, when we are analyzing the market, we shall be able to look at these patterns, and they will be confirmation patterns, and they will always tell whether we are going up or we are going down. Okay, as simple as that. Then we hope people are done. Give me 3 in the chat if that was in your book. Give me 3 in the chat if you have noted that down. Give me 3 in the chat if you have noted that down. Give me 3 in the chat if you have noted that down. And if you have not done so, here is the work. Please write it down in your book. As simple as that. Write it into your book. Write it into your book. And you're going to look at another pattern. There are very many patterns, but we shall take the most important. But I've given them in the order of their opposites. Bullish engulfing, bearish engulfing. Bullish inside bar, bearish inside bar. Dragonfly doji, greenstone doji, gravestone doji. You understand? So that we have put it like that. So let me hope this one is put into your book. And as I look at another pattern, okay? as I look into another pattern. And I look into another pattern. Let me look into another pattern. And the next pattern we're going to look at is the white soldiers. Okay. So we are going to look at the 3 white soldiers and their opposite as well. So when you come here like this, draw like this here, and draw in the same way, bullish, bearish, okay, bearish, bullish. Don't change the order remains. And this time under the bullish, we are going to look at the 3 white soldiers. The three white soldiers. The 3 white soldiers. So the 3 white soldiers is a reversal signal, the upward side. Reversal signal to the upward side. The reversal signal to the upward side when it is always formed at the demand zone. It is formed at the demand zone. At the demand zone. It is always significant after a strong down move. After a strong down move. Okay, it is always significant after a strong. It is always significant after a strong down move. Okay, after a strong down move, that's when it becomes significant. So it is always significant after a strong down move. The 3 white soldiers, you will just find 3 candles, green in color, one being the first one here like this. Sorry, one being first like this, another being like this, okay, and another following it like this. So once you find such candles, once you find such candles, they are called the 3 white soldiers. They are called the 3 white. They are called 3 white soldiers. So they are formed the 3 white. The 3 white soldiers. So after a strong down move like this, you find these 3 candles like this, indicating upward market reversal or market reversal of the upward side. Most of the time, it is formed at the demand zone. Okay, it's formed at the demand zone where market has to reverse from the downward side to the upward side, and here it indicates now the market has changed to the buying side, and the buyers are taking control in the market. So in the same way, we shall look at its opposite, and its opposite are the 3 black crows. 3 black crows. The three black crows. The 3 black crows. The 3 black crows. The 3 black crows. And within the 3 black crows, we have one. They are always red in color. You find out that there are always 3 and 3 like this. So they make a line up. They make a line up, and they lead to the downward trend of the market. Okay, that. Go ahead and give them like this. The black crows. So the 3 black crows, they indicate a market reversal to the downward side. Market reversal to the downward side. Then they are always formed, or they are significant when they are formed at the supply zone. Okay, they are significant and they are formed at the supply zone. It always occurs after a continuous uptrend. It occurs after a continuous upward move. Okay. So after a continuous upward move, this is where we find that after the continuous upward move, this is where after the continuous upward move, this is where we find these three candles form. So when these three candles form, they indicate market reversal to the downward side. Okay, those are one of the most important candlesticks, most important candlestick chart patterns. And when they are formed, you just know, when they are formed, you just know that this is what it means. So let's look at the examples. Let me look at which coin always has volatility. Let me look at link. I had a swing on link. It is moving on well. Look at 1 day and see how far it has gone. So on link there, I will take my profit there, 25%. It will be a very big move that you just need to be patient. You just need to be patient on this coin. It made so when you look at this, it had we had our supply zone down, demand zone down here. Also had the supply zone around this area. The market came and made for us a double bottom, which indicates market reverse at the upward side. So after looking at the candles, we are going to look at these patterns. Okay, we're going to look at these patterns, and that's what we're going to see next. So from there, after looking at these patterns that form the double bottom, the double top, the what. So we shall come, after looking at that, we shall come and we'll start making such analysis you are seeing, okay? Because I want you to learn the candles first. Then after learning the candles, learn their patterns. After the patterns, we are going to learn about these patterns that form, okay? The patterns that form. And once you look at, for example, the double bottom, the double top, you're going to look at them. After looking at them, we shall be able to use the supply and demand zones, make analysis, and take profit, whether 5%, 10%, or whatsoever. Okay. So when you look at link, I've analyzed the link for some good time. I've been following it for some good time. And I took profit around here and I made an entry. I went out of here, and here it gave me another entry when it broke structure. So I expect link to tap the 27.05 line. So once it taps the 27.05 line, it will be time for me to enter to exit the market and take some profit. And if you are on spot, just relax. Just relax. Let it ride up to there. From here, it may retrace a little bit, but still it will make up to 25% and even more. So let's look at the patterns like the double bottom. The double bottom, let's go ahead. Let's continue. And we'll look at chart patterns. We look at chart patterns. You just write the title, chart patterns. Let's write the title, chart patterns. Just write the title, chart patterns. Just write the title, chart patterns. As simple as that. Write chart patterns. So that is the chart pattern. Chart patterns. The chart pattern, the first chart pattern we're going to look at is the double bottom. Yes, double bottom. What's wrong? The Zoom is not responding. Let me try to come back to the Zoom. Okay, let me come back to Zoom here. We're looking at the chart patterns. In the early stages, we have been looking at the candlestick patterns. Now we are looking at the chart patterns. Okay, chart patterns. First chart pattern we're going to look at is the double bottom. The double We shall look at the bottom. What's happening in the Zoom? So let me look at double chart patterns. So what we have been looking at are the candlestick patterns, and now the candles, when candles come together, they form patterns. Okay, now we're looking at the chart patterns. First chart pattern we are going to look at is the Dow bottom. I don't know why the pen is misbehaving. It is not writing anything. What's happening? It is misbehaving. Sorry, it is not writing anything. Let me try to take it back. I don't know why the Zoom is not responding. The Zoom is not responding. I don't know why. It's not responding. Let me go out and come back and see how it will behave. Don't go out from here. Let me just leave the meeting and come back. Do not make sense. Let me see. Let's look at chart patterns. First chart pattern, we're going to look at the Dow bottom, but it is not. Don't know why it is not writing, but just write the Dow bottom. I want you to write the word Dow bottom and draw this pattern you are seeing here, this W. Draw this W, you are seeing like this. Draw for me that W like this and write and say, this is a market reversal signal to the upward side. Okay, market reversal signal, the upward side. It is a market reversal signal to the upward side, and it is formed at the demand zone. And you can see that this pattern is at the demand zone. Okay, it is a pattern on the demand zone. It is formed at the demand zone, and it indicates market reversal signal to the upward side. It is formed at the demand zone, and it indicates market reversal signal to the upward side. So that is a double bottom. That is a double bottom. So my Zoom is misbehaving, and I can't write anything. I don't know why. Okay. So that is it. A double bottom. This is on here. It is a double bottom. The bottom is formed like this, and this is the demand zone. Okay. That is the word. This is the demand zone. So it is formed at the demand zone. It is formed at the demand zone. Formed at the demand zone. It is a reversal signal. It is a reversal signal to the upside. It is a reversal signal to the upside. So it is a reversal signal to the upside. It is formed at the demand zone. It is, so it indicates a bullish move or a bullish trend. So whenever you are trading, for example, you are seeing here, they have been trading this coin, and I find out myself that it has formed a Dow bottom. I don't ask anybody, okay? So when I see it forming like this at the demand zone, I see that it is tapping in the zone. I just make my entry here after the confirmation, and I ride it here. And since it formed a double bottom here, and here it was resisted a little bit, comes back here, it tests the area, it tests this neckline, then it is a bullish move. I expect this coin to go up to $27.075, and this would be a 25% move. It will be a 25% move from where we are to here, up. It will take me time. Only that I'll just need to be patient. And when I try to say for how long should I wait? So if I try to say for how long should I wait? From right now, if you are to enter this coin, you have to wait for how many? For 26 days or 26 bars. It may be less or more, depending on the market size. But you just wait. If you put like $100, or if you're on the spot market and invest just $100, and it moves by 25%, it means you will have got your $25. Okay, as simple as that. So that is the double what? That's the double bottom. Are you tired? We stop here or we continue? Give me a reaction. Give me a reaction. Should we continue? Give me a reaction. This lesson is always at 9. We shall conduct lessons at 9 in the morning and 9 in the evening. We are conducting lessons 9 in the morning and 9 in the evening. We are conducting these lessons 9 in the morning and 9 in the evening. Please endeavor to attend, as we are going to build from where we have stopped. Okay, so you have looked at the double bottom. Then tomorrow we shall go ahead with the double top. Okay, so double bottom, double top. You have to look at a lot. You have double bottoms, have double tops, have triple bottoms, have triple tops. We have the heads and shoulder, the inverted head and shoulder. Have a lot of patterns, a lot of chart patterns are going to look at. So when you're missing, you just miss at your own risk. Okay? Miss at your own risk. And from there, we shall do technical analysis. Make sure the technical analysis you are going to learn to be very important. If at all you have passed through the beginning lessons. Okay? If you attend these lessons, it will be good. If you don't attend, it will disturb you. Unless you have any question. Unless you have any question. Do you have any question here? Do you have any question here? The mic is open. So if you have any question, and tomorrow, hope we are start in the evening, beginning from there. We have stopped. I don't want to over teach. Any reaction? Any reaction? Any reaction here? Any question? Raise up your arm if you have not yet bound and you have not made any single coin today, because I see. Give me a reaction. Yes, I will stop here if you don't have any question. And if you have any question, yes, understand you people that are here that we have lessons at 9 in the morning and 9 in the evening. We have lessons 9 in the morning, 9 in the evening, standard time, East African Standard Time. Allow me to stop here. If you don't have any question, please go and make a decision on that. And let's meet again at 9 in the evening.